Wow. So this is actually interesting. I appreciate bringing this up. So you're instead of
Mhm.
optimizing for the IRR, which is what was normally, now you're seeing kind of just a whole industry pivot toward the DPI, and because of just what you mentioned in regards to kind of the inefficiency. Interesting. Interesting. Do you feel like by optimizing for the DPI would, as an investor, would be
Mhm.
beneficial? Do you see that long term, or what is your perspective? Or do you think the IRR is still kind of a premium kind of metric to focus on?
Well, I think IRR, depending on where the manager marks their IRR, right? And I think that's a really fair question in terms of what LPs, family offices, should feel comfortable asking as part of their diligence process with managers they might be evaluating is how do you measure IRR on a net basis and a gross basis, and how do you benchmark that against other funds of your category in the asset class. And so, at MVP, we have, I don't think we take a traditional route. I think we actually take a quite a conservative route with how we measure IRR because we're realistically evaluating where these private companies are actually, I would say, trading, or where there's a market clearing price that we're actually aware of in the market. And that might actually be different relative to their last round of valuation. So we're using a few different measures when we actually measure our IRR, and we disclose that very wholeheartedly to our LPs to say, hey, listen, I don't know if we generally believe that we should always use the basis of a last round of funding as the mark to measure IRR against, right? But of course, if the company just closed a new primary round, right? They raised some big fat round of funding in the late stage and it was a clean round. And what does that mean, right? It was a traditional round, nothing funky, no debt covenants, nothing with crazy hurdles or something else. Well, you know what? That's a pretty fair mark if that closed recently as a new round of funding. But otherwise, we ourselves are looking at other indicators, as I mentioned, involving a few different points of data to measure on IRR. But that's where I think DPI comes in, is that just basis of saying truly how much capital have you returned to your LPs, right? And then further, Christian, I think it's really fair to look from a diligence perspective at the managers that you're evaluating as a family office, right? If you're still investing in venture, is how and when are they going to return your capital, right? What are their obligations to return your capital? Because I have also now heard of certain disgruntled, limited partners that have not been given their net return in the form of either a distribution or otherwise following the exits of certain private companies. And instead, their capital is being used, in a variety of ways by the investors. And it's not necessarily something that certain LPs have felt was disclosed properly or transparently when they went to initially deploy in certain managers. And so having that understanding of the obligations of the return, when is your distribution going to occur, how is it going to be calculated, these are really traditional diligence questions, but I would say in today's environment it's even more heightened to ensure you understand that as a family office if you're deploying into a new manager.
Getting very clear and getting very concise on that, and that's kind of what's top of mind, which is interesting. I got to do a little bit more research on the DPI structure. That's the first time I've ever heard where that's been kind of a focus point, which does make sense though when you're talking just kind of the macro and kind of just the sentiment of what's going on in the industry. When you're looking, because I was talking to another investor friend, and in this area, there's a ton of companies that are that unicorn status, pre-IPO company that haven't went IPO and so forth, and so there's tons. And though it doesn't mean that these individuals are deploying capital in each one. So I was talking to another investor and they look at probably 50. And there are a lot of times they're on the cap table, bigger checks and so forth. Out of the 50 though, they underwrite. Only maybe 12 do they actually deploy and they actually, kind of pass it to the LPs and so forth.